Trump's $2 billion Bitcoin move, inside the presidential crypto strategy. Imagine a media company hoarding $2 billion worth of Bitcoin while its founder sits in the Oval Office. But here's where it gets controversial. Those same crypto assets now account for most of the president's theoretical net worth. And this is the part most people miss. The move is wrapped in questions about conflicts of interest and policy-driven profit. Last Monday, Trump Media and Technology Group announced it had amassed roughly $2 billion in Bitcoin and related securities, a sign that President Trump's high-stakes shift into cryptocurrency has rapidly expanded since he took office. The disclosure sent shares of TMTG, trading under the ticker DJT, soaring as much as 9% at the opening bell, before settling up about 4% by early afternoon. These Bitcoin holdings now represent nearly two-thirds of Trump Media's total liquid assets, according to the company's press release, effectively turning the firm into one of the largest corporate crypto treasuries in the world. At the same time, the combined value of President Trump's stake in the company has climbed to almost $2.3 billion on paper, reflecting how deeply the administration has embraced digital currency. A recent Forbes analysis even concluded that cryptocurrencies now make up the majority of the president's apparent wealth, an astonishing turnaround for a leader who once dismissed Bitcoin as a highly volatile asset. Trump has since vowed to transform the United States into the world's cryptocurrency capital. He has signed an executive order to establish a strategic Bitcoin reserve, appointed a crypto czar, and persistently urged Congress to pass legislation that would solidify the industry's legal framework. On Friday, he added to those efforts by signing the Genius Act into law, marking the first major federal regulation for stablecoins after it passed the House with bipartisan support. Meanwhile, other Trump-connected crypto ventures have reaped millions of dollars. World Liberty Financial, a decentralized finance platform backed by the Trump family, has generated about $500 million since its September launch, and the newly minted Trump Memecoin contributed further gains just days before inauguration. Critics, including Democratic lawmakers and ethics experts, warn that this blend of private crypto interests and public power creates an environment ripe for corruption. As a stakeholder in crypto assets, President Trump will likely profit from the very policies he is pursuing, the advocacy group Democracy Defenders Fund warned this spring. Trump's spokespeople counter that his assets reside in a revocable trust managed by his son Donald Jr., shielding him from direct control. Yet those same assets still belong indirectly to the president, and the funds would revert to him once he leaves office. Since launching Truth Social, its banner app, Trump Media has effectively reinvented itself from a niche social network into a fintech and financial services company. It went public last year by merging with a special purpose acquisition company, SPAC, drawing thousands of retail investors despite modest ad revenue figures. In late January, the company unveiled a new fintech brand called Truth.fi, backed by a $250 million allocation that included Bitcoin and exchange-traded funds. By February, it was pitching a strategic acquisition fund to select investors, and in March it partnered with Crypto.com to roll out a series of ETF filings. The crescendo came in late May, when TMTG said it had raised over $2.3 billion in net proceeds from institutional stock sales and convertible notes, earmarked explicitly for building out its Bitcoin treasury. The timing couldn't have been more dramatic. TMTG's Monday announcement arrived less than a week after Bitcoin vaulted past $120,000 on renewed optimism that Congress would finally clear new crypto legislation. "We're rigorously implementing our publicly announced strategy and fulfilling our Bitcoin treasury plan," Trump Media CEO Devin Nunes declared in the press release. "These assets help ensure our company's financial freedom, protect us against discrimination by traditional banks, and create synergies with the utility token we plan to introduce across the Truth Social ecosystem. Does it make sense for a sitting president's media company to amass such a massive cryptocurrency position? Should national policy be influenced by someone who stands to gain from rising Bitcoin prices? Let the debate begin. Agree or disagree? Voice your thoughts below. Trump's $2 billion Bitcoin pivot, a new era for crypto. From skyrocketing Bitcoin prices to Trump's strategic pivot, a deep dive into the cryptocurrency connection. Imagine waking up to find that the value of your digital gold, Bitcoin, has shot up by nearly 70% since the last presidential election. That's the reality we're living in. But here's where it gets controversial. President Trump's administration appears to be more than just a passive observer in this Bitcoin boom. In fact, it seems to be playing an active role in promoting cryptocurrencies, with potentially significant consequences for the American economy. Let's start with the jaw-dropping news. Trump's media company, Trump Media and Technology Group, TMTG, recently announced a staggering $2 billion investment in Bitcoin. This move comes after TMTG, the parent company of Truth Social, lost over $185 million on just $3.6 million in revenue in 2024. But here's the kicker. TMTG isn't just investing in Bitcoin, it's essentially transforming into a Bitcoin holding company, following the playbook of MicroStrategy, a company now known as Strategy. Strategy sells software and tech services, but its real business is buying Bitcoin. Why is this move so intriguing? Because if the price of Bitcoin continues to rise, TMTG and Trump stand to profit handsomely. But here's the twist. Trump doesn't just have to hope for a price increase. As president, he has the power to drive up the price of Bitcoin through his policies and executive orders. And this is the part most people miss. Trump has been systematically using his presidential power to promote cryptocurrencies. Shortly after taking office, he signed an executive order strengthening American leadership in digital financial technology, which repealed a previous order by President Biden that aimed to protect consumers and investors. Trump's order emphasized the right of individuals to use blockchain networks without persecution, signaling a more lenient regulatory environment for cryptocurrencies. But that's just the beginning. Trump's administration has taken several bold steps to legitimize and support the crypto industry. He established a strategic Bitcoin reserve and U.S. digital asset stockpile, essentially making the federal government a major player in the Bitcoin market. The Senate confirmed Paul Atkins, a pro-crypto advocate, as the SEC chair, who quickly dropped lawsuits against major crypto players, including Ripple. Trump also signed the Genius Act, a landmark legislation that legitimizes stablecoins and paves the way for wider adoption of cryptocurrencies. The question on everyone's mind is, what's next? Trump is considering allowing 401k retirement plans to invest in Bitcoin, eliminating capital gains taxes on crypto, and even directing the Federal Reserve to hold Bitcoin as part of its foreign currency reserves. These moves, if implemented, could significantly boost the value of Bitcoin and other cryptocurrencies, potentially reshaping the American financial landscape. But here's the controversial part. While Trump seems to be pushing for a more favorable regulatory environment for cryptocurrencies, he's also positioning himself to profit from these policies. His administration's close ties to the crypto industry and the influx of campaign donations from crypto executives raise questions about potential conflicts of interest. The crypto industry's courtship of Trump began in earnest in 2024, with crypto executives raising millions of dollars for his re-election campaign. Trump's embrace of crypto provided a significant fundraising boost, with major investors like Mark Andreessen and the Winklevoss twins contributing millions to pro-Trump super PACs. The financial conflicts in the White House extend beyond Trump himself. David Sachs, Trump's crypto czar, continues to work at Kraft Ventures, a venture capital firm with investments in crypto companies. Despite multiple waivers allowing Sachs to maintain his investments, the lack of transparency surrounding his actual crypto holdings raises concerns about potential conflicts of interest. In conclusion, Trump's pivot to Bitcoin and cryptocurrencies is a complex and controversial issue. While it offers potential benefits for investors, it also poses significant risks for the American economy. As the crypto industry continues to grow, it's crucial for policymakers, investors, and the public to carefully consider the implications of Trump's pro-crypto policies and the potential conflicts of interest at play. What do you think? Is Trump's embrace of cryptocurrencies a strategic move for the American economy or a risky gamble? Let's discuss in the comments.